Hello traders and welcome to another video review. Today is Friday, August 23rd, 2024. Let's find out what's going on the economic calendar. Overnight data were in form of the retail sales and core retail sales data from New Zealand. As you can see, it deteriorated from 0.4% to minus 1.2% and from 0.3% to minus 1%. Japanese data were in line with the expectations. National Core CPI increased from 2.6% to 2.7% as expected. London session is without any important data releases. However, the US session will be full of data. Jackson Hole Symposium starts today at 2 p.m. and we start with the FOMC member Bostic to give a speech. Retail sales and core retail sales data from Canada scheduled for release at 2:30, and then all we got are the data from the US. Building permits scheduled for release at 2:30. New home sales scheduled for release at 4 o'clock. And the key event of the day, Fed Chair Jerome Powell will give a speech at 4 p.m. 1 hour later, we got the Bank of England Governor Bailey to give a speech as well. So very busy US session, and I guess that we should take a look on all of the markets related to the US dollar and S&P 500. As usual, we are going to start with euro dollar. 4-hour chart of the euro dollar is showing us some sort of the reversal signal. Shooting starish pin bar, something like this is has been made with the high at 1.1175, and right now we can move our or add our one more level, technical resistance level higher here. Let me just move it as it should be moved. There you go, and the color will be of course the red. So we got the technical resistance. As you can see, the market went down, tested the level of 1.11 as indicated, the local temporary short-term technical support, and bounced slightly from it. Nevertheless, this level here, 1.1135, is now technical resistance. The market trades below 50 periods moving average on a 4-hour chart as the RSI momentum is going lower towards the level of 58 point now again. The key short-term technical support, one is 1.11 and the other one is 1.1048. So the market might be positioning itself ahead of the Jackson Hole Symposium and the Fed's chairman speech. So definitely some sort of the weakness can be seen here. Nevertheless, let me just zoom out a little bit so we can see what are the corrections here. I guess that this is the tool I need, the price range tool. I guess that the biggest correction is here, and it is minus 1.15. So if we take this one, it's lower. There you go, 0.89. And the recent one, even if it's completed, is still the smallest correction in the whole situation here, minus 0.68. So as long as we won't have minus 1.15 correction to the downside, the outlook remains bullish because there is no overbalance of price and time. So apparently the outlook for the euro dollar is still bullish, especially with this kind of a momentum. So that was the euro dollar. US dollar index. US dollar index. Let's take a look ahead of the FOMC. 4-hour chart moving lower. The zone here, the supply zone, never tested. Local high made at the level of 101.60 and then reversal. So let me just zoom in. The current situation looks like this, and the local technical resistance is located here. So we need to break above this level in order to move higher. 101.16 local technical support is present here on this chart as well. Is of course the pin bar low at the level of 189. So that's the key That's the key level here. Let me just take my arrow to market. I lost my arrow. Where is my arrow? There you go. Arrow up. So that's the level I would like to show you and indicate the significance of this short-term technical support. As the market goes down, of course, we got some bounces made here as well. So let me just do the price range. So from the beginning of the August low to the high is 1.36. The other one is I guess is slightly lower, but it is significant as well, 0.94. And the other correction to the upside is of course the recent one, and the recent one is the smallest one, 0.70. Again, the same situation as it is on the euro dollar. As long as the market stays below the level of 50, let me just mark the level of 50 then on this chart. There you go, level of 50. As long as the market stays below the level of 50 on the RSI and the corrections are smaller than 1.36, the outlook remains bearish, target 160. So US dollar index done. What is going on the S&P 500? The S&P 500 for our chart looking bearish. Let me just switch to daily to see what's going on here and zoom in. Okay, so we can zoom in here on a daily time frame chart. There is bearish engulfing here. It's no doubt that this is bearish engulfing with the local high at 5,643. So we can see this zone right now made from the high of the 16th July and the yesterday's high from August 22nd. Now we're testing the technical support, 5,560, but there's plenty of room to the downside. Momentum is still strong, 57 points, no big deal. Nevertheless, it doesn't actually looks like it wants to move higher for now. Maybe soon it will tune up, but it doesn't actually looks like Bulls wants to do it. So for me it looks like a suckers rally. Suckers rally occurs when we have local high, then massive movement to the downside. A, B, and C, three waves, clearly corrective, and then this rally here appears that doesn't actually make a new swing high. So this is why I call it suckers rally, because plenty of people get trapped into this rally, thinking everything is back to normal. We should have another swing high soon. Well, it doesn't actually works this way. When we go to the 4-hour chart, I'm trying to make some kind of a let's say channel. Maybe we will not use the pitchforks this time, but we will try to use some channel, and it will be the simplest one, which is the parallel channel, so we can see what is going on here. So that's our channel. Okay, let me just move my screen. There you go. This is our channel. Basically, it looks something like that. Let me just move it here, and this one a little bit higher. Okay, and this one maybe here. Looks pretty good. No problem. Something like that. Okay. I'm just trying to move the upper line. Okay, it doesn't actually work. Let me just do it one more time. So this is that level. This is that level, and we go to the upside, and as we go to the upside, we got, there you go, this is kind of a channel I wanted. So we are still inside of this channel, but it looks like there might be some problem with 5,475 where the market might be breaking to the downside. So please keep an eye on this level. Momentum sharply reverse from the extremely overbought conditions. Sharp reversal again doesn't mean good. It doesn't actually looks good for the market participants. We almost hit the level of 50, so that's basically the neutral level. Any breakout to the downside is negative for this market, and we should see lower levels. And because we talk a lot about the gold yesterday, let's take a look what is gold doing. Yes, this is exactly what we expected, a bounce from this level here. let me just switch the colors here because there might be misleading. This is now technical support, 2483, slight bounce. Nevertheless, if we zoom in, we can see something interesting. Because we got a rather bigger than expected movement to the downside, especially the last bar, 2.41, of course minus 2.41. So if we apply this to the overall swing corrections, this is the biggest correction during this whole swing to the upside, right? So let me just mark the upside. There you go. This is the swing high, and this might be the price and time overbalance. Of course, there's one more bigger correction, ABC to the downside, but this is not a part of this movement here. So what else? Trend line. There is a weak trend line here that might come handy in a future. So let me just apply it here, of course, as usual. And it looks like the market wants to go lower. It wants to move below the technical support. Next target trend line, eventually 2436. Short-term bearish outlook for gold and the Bitcoin. Well, Bitcoin. Bitcoin bulls broke above this trend line here, the blue one. Let me change it out. Let me change it to the orange one so we can stick to the colors as usual. But it doesn't actually look like the market wants to move any higher because the volatility is low. We are still testing this breakout, testing the trend line, testing the 50 and 100 periods moving average on a 4-hour chart. But just because there is positive momentum, and the bears that don't want to use it, basically, right? They don't want to see. They don't want to perform the breakout. Maybe that's because the Jackson Hole Symposium. Maybe that's because of the Fed's speech, Fed's chairman speech today. They are in the wait and see mode before they will do something. So outlook didn't change. Actually, they want to stay and see what's going on. We are going to stay with them and see what the bulls will do after the Jackson Hole Symposium is completed. So quick review of the US dollar index, euro dollar and S&P 500 together with the gold and Bitcoin because of the coming Fed's Powell speech on the Jackson Hole Symposium and very busy US trading session. That's everything from me for today. Thank you very much for watching this analysis. Leave the like, subscribe. See you guys next week. Take care. Bye bye.